Hello guys, welcome back to my channel. This is Gideon of Gideon Forex Academy. Consider subscribing if you haven't already. If you're a new person who is interested in Forex trading, there is a video upcoming for you. So I'm going to be explaining a new strategy which actually works. All right. So I've been backtesting this strategy for some time now, and I have noticed that it works on all time frames, especially on lower time frames, and even scalping. You can actually use this strategy. I call it the trend continuation strategy. It's the trend continuation strategy. Okay, so we are going to be looking at it and how we can actually trade this profitably. I want you to watch this video till the end to grasp the entire concept of this strategy. All right, so we are going to jump right in. But before we go, for you who has not subscribed yet, consider subscribing to this channel. It just takes a second. Hit the subscribe button, like this video, and share with like-minded traders as we begin. All right, so now, as you can see here on the screen, we have the first thing we are going to be looking at is trend, how this strategy works. You have to first identify your trend. Where is the market moving to? Which direction is the market taking? So that is the trend. All right, you can call it market structure. The trend is the direction, the apparent direction in the whichever time frame that you are trading in. All right, the trend. Identify the trend. The second thing we will be looking at is consolidation or sideways movement, where the market moves sideways, okay, in no particular direction. And then the third thing we'll be looking at is liquidity sweep. Okay, for those who are ICT fanatics, you'll be interested to know how this works, or how you can incorporate this liquidity sweep into this strategy to see how it works. Okay, so the fourth and last thing we'll be looking at is continuation, and continuation is what you really want to pay attention to, because that's playing how you can actually make your entries and make them the right way. All right, so we are going to begin with the trend. I've already made some illustration here for you to understand better. So we are looking at a downtrend, as you can see here. This is a downtrending market. So this T represents trend. All right, so in a downtrending market, let's say we get to support. Support is also called the area of value. Okay, this area is our area of value. All right, the support is our area of value. Let's say you get to a previous support, okay, where the price could not break below previously. Let's say you have a consolidation in this fashion. Consolidation is basically when the price moves sideways. Okay, this area here is an area of consolidation. You can see when the price got to support, we can see a sideways movement in this fashion. Okay, the price is not breaking either below or above. We have no clear direction of the market, okay, until we get to this point here. So this is an area of consolidation. Okay, pay attention, guys. So this C represents consolidation. So you have consolidation here at the area of value, which is our support area. The price is not breaking below, and it's not going up either. All right, so we have this kind of formation here, okay, and then we see a break below. So when we see a break below, you see this red candle broke below this level. As you can see, the red candle broke below this previous support area. So it broke below there. So in this case, most retail traders make the mistake of jumping in to sell immediately when they see a break below, okay, and a retest. They always wait for a break below, and then there's a retest. Okay, as you can see, that green candle represents our retest. Okay, so after the retest, most retail traders are looking to sell at this with the next candle. Okay, they see the next candle and they are selling after that candle, and they're placing their stop loss just above there. Okay, and they are aiming for a 1-to-2 or 1-to-3 risk to reward ratio to the downside. This is typically what the trader the retail trader is doing. They place their stop loss, okay, just above here. Okay, this area is where they place their stop loss. Okay, now the problem with that is that once you trade like the 99% of traders trade, you are most likely going to be taken out, because that is what everyone anticipates. All right, so everyone puts their stop loss just above here. Most traders put their stop loss just above here. The wise trader would wait, okay, for a liquidity sweep. Now that is where it gets interesting. So don't be like the 99% who put their stop loss immediately here and immediately sell after a break and retest. Wait for a liquidity sweep. In most cases that happens, and I will show you that in just a moment in the market. So this liquidity sweep is what you see with the next candle, with this long wick here. You can see this long wick here, okay? As most traders place their sell orders here, okay, they are taken out, okay? When you place your sell order here and you place your stop loss just above here, guess what? In most cases, the price retraces back to this area and takes out the stop losses which are set here by most traders around here. So there are so many stop losses, okay? There are so many stop losses around this point, okay? So many stops here. So there's a liquidity sweep. The liquidity equals money. As many stop losses that are taken out or swept equals more money and equals more momentum in the opposite direction. So you can see that the liquidity was swept by this long wick here, okay? So the LS here represents our liquidity sweep, okay? So after the sweeping of liquidity, you can see the momentum to the downside. So a smart trader would not sell at this point. A smart trader would wait for that liquidity sweep to take place and then they sell. This would be a reasonable trade to take after the liquidity sweep has been taken. So where you take your trade, okay, that would be the continuation, another C, a continuation of this previous downtrend. Okay, so that would be another C, representing a continuation of our downtrend. Okay, so please guys, watch this again. All right, do not place your sell orders immediately after break and retest, because most traders are doing the same thing and they place their stop losses just above here, just above the previous support or area of value, and that is where liquidity is usually swept by the next candle around here, and the market and the asset will gather momentum in its price to move downwards. The market gathers momentum to move in the opposite direction. So the smart trader would always wait for the continuation after the liquidity sweep to continue in the direction of the market previously. All right, the trend, okay, the T represents the trend. That would be the trend. The trend is downtrend, and then you have the consolidation. The consolidation right here. Okay, this whole box is a consolidation of the price. Okay, and then you have after the consolidation, you have the liquidity sweep up here. The LS, that would be the liquidity sweep right there. After the liquidity sweep is when you want to actually sell. So you would place your sell after the liquidity sweep to target these lows down here, okay, to the downside. So this is how you would trade this. Watch out for the manipulation after the consolidation. Don't fall in for breakouts or sells. Like in this case, somebody would have sold here too early before this liquidity sweep. Okay, wait for the liquidity sweep. Once the liquidity is swept, the reason why there's a sweep here is because many traders placed their sell orders too early around this point. Okay, and then the price retraced and took them out with this liquidity sweep candle right here. Okay, because there are so many stops here. All right, so you wait for that sweep, usually with a candle with a long wick in the opposite direction. Wait for that liquidity sweep. Once that is clear, you can then look for confirmations to sell, like at this point after the liquidity sweep. I advise you to sell after the liquidity sweep candle has actually closed. Like in this case, you'd sell after with that candle. The next candle, when the next candle opens, you'd sell, place your stop loss just above there and target the lows, okay, after the liquidity sweep. Okay, guys, so in the next example, in the case of an uptrend, like in this case, this is an uptrending market. It's very clear. So this would be an uptrending market. This is an uptrend. So this would be our T. T represents the trend. Okay, remember that. So T is an uptrend. All right. And then we get to our area of value is a resistance in this case. Okay, our area of value is a resistance. All right. So resistance is where the price was not able to break above several times, at least 2 or 3 times. So the price could not break here, okay, several times during this consolidation. So that becomes our area of value or resistance, all right, in this case. So we have the trend, then we have consolidation right here. That would be our consolidation, where the price is just bouncing in between and it's not creating, really not moving in any direction but sideways. All right, so you have consolidation and then you have a break above here. Most traders would jump in for a buy around this area. They would jump in for a buy after this retest. They would probably buy at this candle here. Okay, they are not wrong, but they are jumping in too early. So some traders would wait for a break above and a retest, and then they are buying here. And I will show you why that is a mistake. Most times they would place their stop loss here and target a 1 to 2 risk to reward ratio to the upside, like this. Okay, they are not wrong, but they are jumping in too early. The reason is because when you jump in too early, most traders are doing the same thing. That is the issue. Most traders, retail traders, are jumping in here after the break and retest, and they place their stop losses right here. So the stop losses are in very predictable places. Stop loss is right there. Okay, so there are so many stop losses right here. Okay, after the break and retest, so many are placing their stop losses here. Okay, so guess what? Usually what happens is that the next candle or the next price action creates a liquidity sweep where many stop losses which are down here are taken out. Jump in too early, you place your stop loss in very predictable places, just like any other Forex trader, retail trader, and then the market returns, retraces, and takes out liquidity with this long wick here. You can see this long wick. It grabs liquidity, sweeps liquidity right here. That is our LS. So this is a liquidity sweep. It takes out the stop losses, gathers momentum, and moves aggressively in the opposite direction. So these traders here lose money. They lose money into the market, and the market gathers more momentum to move in the other direction. All right, after their losses have been taken out, okay, or their stop losses have been hit. Okay, so the best way would be to wait for the liquidity sweep, to happen, and then at the close of that candle which takes out liquidity, buy at the next candle. Okay, so you would buy after this candle closes. You would buy probably there at the open of that candle, like in this case, from this point you'd buy all the way to the upside. Okay, so that is how you would trade this. Always wait for a liquidity sweep before you can buy. This is an uptrend, an uptrending market, you can see. Okay, this is an uptrend, which would be your T. Okay, that is our trend. But then when the price gets here, you can see a consolidation right here. This is a consolidation. This is a consolidation. Okay, so that would be our C. Okay, a consolidation, and then there is a break above. Some traders, with this break above right here, some traders would be placing buy orders. That is the wrong way to do it. Okay, you have to wait for a confirmation. So now some traders would be placing their buy or their buy orders here. Okay, and placing their stop losses probably there, and they are targeting all the way up because they see a breakout right there with this candle. Okay, but that's the wrong way to trade. You have to wait for a liquidity sweep to happen. So after you identify the trend, there is a consolidation that happens. This is the strategy. Okay, you have to train your eyes to see the trend, the consolidation, the liquidity sweep, and then after the liquidity sweep, you wait for the next candle to continue the trend. Happen right here. You can see this candle sweeps liquidity because most traders would have placed their buy orders right there after the breakout, and they are placing their stop losses right here or right here. And guess what? Their stop losses are hit. Okay, so liquidity sweep happens right here. That is our LS. After the liquidity sweep is when you would place your order. With this bullish candle, you'd place your order. Okay, and then you place your stop loss just below the liquidity sweep candle, and then target all the way up right there. Okay, so this is how you trade this and continue the previous trend all the way up. Okay, this would be a winning trade. So it is trend, consolidation, wait for a liquidity sweep, next candle, at the close of the next candle, bullish candle, to continue the previous trend, okay, of the market. So guys, that is the strategy. Remember, trend, consolidation, wait for a liquidity sweep, and then the next candle confirm your entry in either the bullish trend or in the bearish trend. So this is how you trade this strategy. Pretty simple and straightforward. So guys, thank you very much for watching this video till the end. If you have gotten value from this video, give it a like and also share with your like-minded traders, and subscribe to this channel, guys, for those who are new here. And also comment down below for those who have questions. Just comment down below. I will be able to answer your questions. Thank you very much. Until next time, bye bye.